Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at NTRA, or Natura Inc. NTRA is a clinical genetic testing company that specializes in non-invasive, cell-free DNA testing technology with a focus on women's health, cancer, and organ health. Here's the barchart.com technical opinion rating for NTRA. The bar chart rating is an 8% buy with a weakest short-term outlook on maintaining the current direction. We are slightly more bearish than that. According to Prime Trade Select rules, a stock is in a bear trend on a monthly basis if the stock price is below the 10 period or 10-month simple moving average. The monthly chart shows that NTRA is below the moving average line, so the monthly trend in NTRA is down. Now we're going to look at the daily chart. A stock is in a bear trend on a daily basis if the 50 period or 50-day exponential moving average is below the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The daily chart shows that the blue line has been below the green line all year, so the daily trend has been down and will officially be down again in a couple of days. Since the monthly and daily trends are both down, NTRA is on our sell list. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy puts if the stock price is below the lower Keltner channel line. Anywhere inside the Keltner channel or even above the Keltner channel is fine. The NTRA stock price is near the midline of the Keltner channel, so NTRA is inside the sell zone. Since the trend is down, we want to buy a put. NTRA has 4 option chains to choose from. We're going to use the October 21 option chain. Right now, the October 21 options have 33 days to expiration. Here's the NTRA option chain for October 21. NTRA closed at 48.55 on Friday. That means any puts on the list from 105 to 50 are in the money. Let's take a look at the profit potential for purchasing the 50 strike put, which is the closest strike to the current price of the stock. The bid-ask spread for the 50 put is 480 to 690. We try to enter at the midpoint, so we'll use 585 as the buy price. Our put option calculator shows the profit potential for this put based on NTRA price changes at option expiration from flat to a 12.5% decrease in price. We can see that if the NTRA stock price is flat at 48.55 at option expiration, the 50 put will lose 75.2% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out our trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move down 1% for the put option we purchase to break even and start profiting. Now let's take a look at buying the 55 strike put to see if it qualifies for the 1% rule. Here's the put option calculator picture for the 55 put. According to the 1% rule, we want the put to at least break even if the stock price is down 1%. The calculator picture shows that if the NTRA stock price is down 1%, the 55 put will lose 19.4% of its value. We want that to be break even or better, so the 55 put does not meet our requirements. Let's see if the 65 put will work. The bid-ask spread for the 65 put is 1610 to 1780. We try to enter at the midpoint, so we'll use 1695 as our buy price. The 65 put is close enough. If the NTRA stock price is down 1%, 65 put will lose 0.1% or have a minus $1 loss. That's close enough to break even for us to use, so the 65 put is the one we'll buy. The put option purchase calculator also shows that if the NTRA stock price decreases by 2.5%, the 65 put will make a 4.2% or $71 profit. If the NTRA stock price decreases by 5%, the 65 put will make an 11.4% or $193 profit. If the NTRA stock price decreases by 7.5%, the 65 put will make an 18.5% or $314 profit. The minus 10% and minus 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the NTRA stock price does not make the expected move down and remains flat at expiration, the 65 put would only lose minus 2.9% or minus $50 compared to the 75.2% or $585 loss for the 50 strike put that we looked at earlier. Now we want to review a put option debit spread, aka a vertical put spread. For this spread, we want to buy to open the NTRA October 21 60 strike put and sell to open the NTRA October 21 50 strike put. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 60 put for $12.25 and sell the 50 put for $5.85. $12.25 minus $5.85 equals $6.40. So the entry price or debit cost for the spread is $640. The put option spread analysis calculator picture shows that the spread will make a 56.3% or $360 profit if the NTRA stock price increases by 2.5%, remains flat, or decreases in price when the options expire. If NTRA is up 7.5% at expiration, the trade will make 22% or $141. Creating the debit spread will allow us to collect a $585 cash credit to our brokerage account for the sale of the 50 put. As we said on the previous slide, this reduces the cost of entering the spread to $640. Here's a note regarding earnings reports. The next NTRA earnings report is scheduled for November 3rd. Let's review the trades one more time. The first trade was a put purchase. It said to buy to open the NTRA October 21 expiration 65 strike put for $16.95. We also reviewed a spread. The spread said to buy to open the NTRA October 21 60 strike put and sell to open the October 21 NTRA October 21 50 strike put at a debit of $640. Thank you for joining us. We look forward to seeing you again next week.